Today is Tuesday, April 15th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and let's get into it. We haven't had any major events this week, but just as a reminder, tomorrow on Wednesday, we're going to have the US retail sales, and then on Thursday, we're going to see the initial jobless claims. The general understanding is that the average US consumer is spending less and saving more, which isn't necessarily a good thing for an economy based on consumption. So if the US retail sales numbers can come in higher than expected, that would definitely be a positive thing and will give the analyst a better idea of how the US consumer is actually doing. We'll now take a look at where the SPY chart closed out on Friday. It was trading right in between the support level and the resistance level. And then if we zoom in, you'll see on Monday, it did close right at the resistance level. Unfortunately, it was rejected today and it wasn't able to get above that. But I'm hoping that with some positive US retail sales numbers tomorrow, it'll give enough push to the market to get above the resistance level. If we zoom back out, you'll see that I re-added this longer term green trend line. And that's ultimately where we're trying to get to relatively get back to the bull market that we were seeing before the declines towards the end of February. So since the longer term green trend line has an upward slant to it, in theory, if the markets went up tomorrow, it would only have to go up 3.52% to reach it. But of course, that's not really realistic. So we'll spread it out over the course of the next couple of weeks. And that would imply just about a 4% gain to get there. So it's definitely going to take some time and we're going to need more better news than just the US retail sales. But if that number comes in better than expected, it's at least a step in the right direction. These are going to be all 14 of my current positions. Right now, Nvidia, Meta, Microsoft, Costco, and PayPal make out my top 5, and those are going to make up 53.72% of my portfolio. I'm still sticking to the same plan as before, which is I'm going to hold on to these positions until the market recovers. And at that point, I'll be looking to trim some of my Nvidia, which makes up 14.49, and Meta, which makes up 13.58. And I'll be looking to use some of that money to increase some of my smaller positions, such as Walmart or Sprouts Farmers Market. I do have 94.7% invested, which means I have 5.3 sitting in cash. So in theory, I could use some of that cash to increase those positions right now, but I always prefer, and I think it's more psychological than not, to keep a little bit of cash on the sidelines, because if the markets go down, at least the 5.3 that I have sitting in cash isn't going down as well. And I believe that even when the markets are going up, having close to 95% invested is totally fine. So hopefully over the course of the next few weeks, the markets recover and we can start making some moves. Since Monday, my portfolio had a gain of 0.86%, the S&P 500 had a gain of 0.65%, and Pershing Square had a loss of 0.78%, which brings us year to date. My portfolio is at a loss of 5.52%, the S&P 500 is at a loss of 8.04%, and Pershing Square is at a loss of 8.41%. That's going to do it for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.